Hello students, in this lecture I am going to discuss the effect of expenses on accounting equation. Accounting equation you understand students, that is assets is equal to liabilities plus capital. In order to explain the effect of expenses, I have taken some imaginary value students, and in this equation cash amounting to rupees 1,80,000, prepaid expenses nil, debtors 130, outstanding expenses nil, and capital rupees 3,10,000. Now there are three possible transactions related to expenses. Let's go through the transaction and simultaneously let's discuss their effect on this accounting equation. The first one is expenses paid in cash. Expenses paid in cash simply means these are current year expenses and we are getting the benefit of these expenses in the current year itself. I take an amount here, expenses paid in advance, paid in cash, rupees, suppose 10,000 rupees. First thing, remember always students, when expenses paid in cash, so simply go through the transaction, the expense is affecting cash, it means cash amount will reduce, and its second impact will be on what? Capital. Remember one thing, expenses and losses always affect capital directly. These are deducted from capital, and if there is any income, there is any gain that affect the capital positively, that is added to the capital. So see the first transaction, expenses paid in cash rupees 10,000. Its impact will be, impact of first transaction, 10,000 will be deducted from cash, and second effect, it will be deducted from capital. It will be deducted from capital. You can show it through bracket also, and there will be no effect on other items of the accounting equation. So here you can mention, or you should mention, zero, because there is a zero effect on these outstanding expenses, zero. After that you have to calculate the new equation. You will write here new equation, cash 180 minus 10, 1,10,000. Then prepaid expenses nil, debtors remains unchanged, 1,30,000. Outstanding expenses no effect, nil, and capital reduced by 10,000. It amounts to rupees 3 lakh. At the same time, you must understand that accounting equation always holds good in all equations. See, total of asset side 3 lakh, total of liability plus capital 3 lakh. This is what accounting equation reveals itself. Now come to the second transaction. Second transaction is expenses due but not yet paid. It means we have derived the benefit of these expenses, but payment not yet made. It means payment not yet made, these are termed as outstanding expenses. And outstanding expenses form liabilities of the business. It means these are the part of liabilities of the business. We take here the amount rupees 20,000 for example. So understand one thing, outstanding expenses, we have taken their benefit. So it will directly affect capital. So first effect, outstanding expenses will be, I write here also, it will affect capital. Outstanding expenses, I write here outstanding expenses, their first impact will be on capital, it will be deducted from capital. And second effect is where? Separate head, one more head will be created on liability side titled as outstanding expenses. If it is outstanding salary, you can create the head outstanding salary. If it is outstanding repair, you can create the head outstanding repair. If nothing is mentioned, you can create the head outstanding expenses. So see the effect. First impact on capital, it will be deducted from there since it is current year expenses. And second effect, it will be shown under a separate head titled as outstanding expenses on liability side. So impact of second transaction, C, no effect on cash because we didn't make the payment, no effect on prepaid expenses, no effect on debtors. So one thing is clear, that outstanding expenses do not affect any item on the asset side. Its entire effect is on the liability side. First impact, deduction from capital minus 20,000. Why deduction from capital? Because we have not paid in cash, because this is our expense. We have taken its benefit also. And second impact, a separate head will be created on the liability side. We have already included, titled as outstanding expenses. It will be shown there, that is amounting to rupees 20,000. It means it affects is always on liability plus capital side. It will be shown under this head, outstanding expenses and deduction from capital. And after this, now let's calculate the new equation. And the new equation will be as, underline firstly, then write the new equation. Cash unchanged 170, prepaid expenses nil, debtors unchanged 130, no effect so far, outstanding expenses 20,000, and capital reduced to 2,80,000. See, after every transaction, assets are always equal to capital. You can see the total. Now coming to the third one. And the third one is expenses paid in advance, suppose rupees 30,000. See this. What is this expenses paid in advance? This simply means it is not just like the first one, that is at expenses paid in cash. This is expenses paid in cash in advance. In advance means we have not taken the benefit of these expenses. Their benefit we will get in the next year or in future, say. It means this cannot be considered as a current year expense. And any expense which is paid in advance does not affect capital, remember students. So which affect capital? Only the current year expenses and the outstanding expenses. They affect capital. Prepaid expenses never affect capital because it has been paid in advance. Its benefit has not been derived. Only those expenses affect the capital whose benefit we have taken, we have got. So see, what will be the effect of prepaid expenses? Firstly, I would like to write here prepaid expenses. Their first impact will be on cash. It will be deducted from cash. See this, because it has been paid in cash. And second effect on separate head. A separate head will be created on the asset side. See this, like this, titled as prepaid expenses, and it will be shown under this head. So now let's see, let's show its effect. Expenses paid in advance 30,000 on cash, yes, deduction from cash, minus 30,000 will be deducted from cash. Prepaid expenses, yes, it will be shown under prepaid expenses because it will be treated as our asset. So see the effect. On the one hand, one asset is reducing, that is cash. On the other hand, other asset is increasing, titled as prepaid expenses. And there is no effect on other item of the accounting equation. There is nil effect. See, now let's calculate the new equation, or you can say final equation. The new equation will be cash reduced to 1,40,000, prepaid expenses 30,000, debtors 1,30,000, outstanding expenses 20,000 and capital 2 lakh 80,000. And see students, once again 140 plus 30 plus 133 lakh, assets is equal to liabilities. Accounting equation holds good in all situations. So in brief, I would like to tell you once again the effect of expenses. Expenses paid in cash minus from capital. Outstanding expenses, separate head is created on liability side and minus from capital. And prepaid expenses, separate head created on asset side, it is shown under that, and minus from cash. So I believe the effect of expenses you have understood clearly. Practice the firstly illustrations, then the exercises from your book. Listen the lecture again and again to have the complete clarity. Stay connected, improve your knowledge, and if you want to understand the same lecture in Hindi, then visit my another channel, that is Commerce with Difference.